Hey everybody, Economic Ninja here. I hope you're doing well. We're going to talk about the auto industry right now and some more headwinds that are hitting the auto industry. You know, we have seen everything from massive repo numbers last year, people that bought cars they shouldn't have bought in the first place, they can't afford now because of layoffs or inflation, all kinds of crazy reasons. Now we're seeing it move into EVs, where you'd think electric vehicle sales would be crushing right now because people would want to save money, but we're also seeing energy prices spike and all kinds of headwinds there, even to the point where Tesla sales were so bad in 2022 that Tesla is now offering $7,500 rebates just to buy their cars. And that is a very telling sign of what is going on in the auto industry. Now, here's another story out of the hedge, and it's entitled NIO CEO warns, or NIO, sorry, CEO warns of challenging first half to 2023 for the EV maker. Here we go. Questions are already looming about the health of the auto market and especially the EV space after it was announced just days ago that Tesla would be suspending operations at its key Shanghai plant for 1 day longer than is expected this week. Now it looks as though NIO is joining the party, with its CEO warning investors of a potentially rocky start to the 2023 on the horizon. Bloomberg reported on Sunday that Chief Executive Officer William Li said this week that the company would face a challenging first half as a cut in government subsidies and the broader economic slowdown erode demand in the world's largest new energy vehicle market. Li said that demand could be pulled forward to the end of 2022 as customers look to place a vehicle order before national subsidies run out. He made the comments in Hefei, central China this week, also noting that the residual effects of the pandemic continue to mire the company. Now, let me explain something. So yes, he said, we could see a little burst in the last few weeks of 2022 because people are trying to get a hold of some tax breaks, whether they be tax credits or write-offs, what have you, whatever you want to look at it that way. But think about this. He's saying that government subsidies are going to be waning in China in 2023. What does that have to do with here? Well, in America, we're already seeing Tesla sales fall through the ground. We're already seeing companies going bankrupt like Carvana and CarMax. Sales are abysmal, and they're going to get worse. And like I've said before, and I'll say it again, 2023 will be worse than 2022. So you are going to see, with all this recession talk and stuff like that, the idea, the thought inside the average consumer's mind now is that things are starting to look negative. I'd better stop spending too, because it doesn't look like we have good times ahead. And when the consumer starts to feel like they have less confidence in the industry, in the economy, and they start to retract their spending, then what that does is creates a waterfall, a cascade, a landslide in consumer sentiment and sales. So these are just the start of what we're going to see in the economy coming up here pretty soon. And I wanted to get this story out to you as soon as possible. But check this out. It says, though Li says he expects a full recovery by May. Now think about that. What CEO is not going to, oh, no, this is it. Things are going bad. I'm going to have a hard time not only selling vehicles, but getting financing as well. Of course, they're going to say, oh, I see it turn around soon. Or June, we're not so sure. The industry looks bleak. For example, Tesla also announced last week that it would be halting production for slightly longer than expected at its Shanghai plant this month. Additionally, just days ago, we published commentary from an Auto Insider who said that a massive wave of car repossessions and loan defaults would soon be on the horizon in the United States. I completely agree with that statement. As we noted in early December, for almost a year now, we have been dulefully tracking, I can't even read, several key data sets within the auto sector to find the critical inflection point in this perhaps most leading of economic indicators, which will presage not only a crushing auto loan crisis, but also signal the arrival of a full-blown recession, one which has the NBER won't be able to ignore, as the U.S. consumers are once again tapped out. I completely agree with that. Now, guys, first off, this story is out of Zero Hedge, and it is entitled, again, NIO CEO warns of challenging first half of 2023. for the EV maker. I think you are going to see wild times in 2023. So there are a lot of us that are waiting to buy a car, and I want to keep bringing you these stories to keep building that confidence in you that by you saving and waiting on the sidelines for a new car would be a better thing. I'll give you an example. I had a family member go out and buy a brand new Toyota the other day because they needed a car. Their car was breaking down. It was just, they owned their car cash. They just couldn't keep putting money into it. They said, I've got to go buy a new car. And I said, you really should wait. You really should wait and figure something else out, whether it be ride shares or just wait a few more months. They couldn't wait. The emotions were too high. They went out and bought a car, and they paid, they got financing with an excellent credit score over 800. They got in the mid 4%. Literally 2 weeks after buying the car, Toyota comes out with 2% financing on their Toyota cars, and it just crushed this person. Like, oh my gosh, literally I could have been paying less than half the interest rate. But it's a telling sign. I told them, I said, the auto industry is in trouble. Toyota financing wouldn't come out with those numbers unless they were hurting for sales. And that's why they're doing these teaser rates. So guys, I hope you got something out of this. There's a lot going in the auto industry. We're going to see some sales coming up here in this next springtime. Get ready. It's going to be exciting, but springtime's not going to be the bottom. All right, guys, that being said, the Economic Ninja is out.